In May of 2020, FreightWaves Live is headed back to the largest freight market in the Southeast, Atlanta, Georgia. Join FreightWaves for our best event yet, featuring captivating keynote speakers and rapid-fire demos of technology that is sure to take our industry to the next level. This is your opportunity to interact with some of the most innovative leaders as we mark a new decade in transportation. See you in Atlanta May 5th and 6th.
Hello and welcome to this Friday edition of FreightWaves Now. I'm your host, Anthony Smith, and coming up next, we're going to have Luke Falasca talking to the brokers. We also have Andrew Cox making a return, giving a shipper update. But first, a word from Zach Strickland with a carrier update brought to you by Powerfleet. Stay tuned.
Hey everyone, and welcome to your carrier update presented by Powerfleet. So I wanted to show a chart of the volumes year-over-year change real fast, just to show you where we are in relation to last year and the year preceding it. So this is the outbound tender volume index yearly change behind me. So you can see right here, anything in red is a negative comp. So that means that we were seeing contraction year over year. Early part of the year, 2019 was miserable for carriers in general. Not a lot of positive here. You had a little blip here around April, and that's actually from Easter. Easter was different this time of year, and then they made up for it by going deeply negative here in the late part of April around Easter there. This was the real big trough, though, of the year was May of last year. This was right after the tariff announcement from Trump about China. The trade war escalated, etc. Not great. Then throughout the summer, we had continuation of negative comps until about late July, early August. Things got a little bit better. These were not huge increases, however. So anything right here is really just timing of Thanksgiving. And December, though, December was actually a really good month for freight. We talked about this recently. We had 5 to 6% increases year over year in the month of December, contracting period of time with the holiday, etc. We're still we're just under a percentage up. So we're starting to narrow that band between year over year volume comparisons here. So tender rejection rates paint a different story, however. So tender rejections are, of course, a measure of overall capacity. The more a carrier is rejecting contracted freight tenders, that means that there's more activity on the spot market, increasing upward rate pressure. Back down here, we were way underneath last year in terms of tender rejection rates. And over time, we have become closer and closer to zero. You see this line up here? This is zero. We have not been flat yet versus the 2018 year, which was extremely tight. And we saw a lot of increases in rates over that period of time. We're roughly about 2.69 percentage points down. So that's 269 basis points down year over year. We are starting to get into a lot more favorable comps year over year. But that being said, the overall freight market is still cooling, and we are in that period of January where it's just not going to be a tight time, except for some isolated pockets across the country. Weather, of course, is a big issue this time of year, and we should see some of those across the northern tier pop up from time to time. A few years back, we had nor'easter after nor'easter really decimate the Philadelphia market and up here around upstate New York and Pennsylvania. But we're not seeing those right now. We're going to have a system come through over the weekend. Should not have too much of an impact, but it is something to watch in the Midwest here. Now, the Midwest does have the market of the day for me in terms of Green Bay, Wisconsin. Now, up here in the icebox of the country, not a lot of carrier activity, especially this time of year. Cold, snowy, just not a lot of shipper activity either. So there's not a lot of DCs, but we are seeing this dark blue on my weighted rejection index map here tell us that this is one of the tighter markets of the country right now. So looking at the Green Bay market today, all length of hauls showing green here. That means that they're all getting tighter. The tweener rejection, so anything moving between 450 and 800 miles is going to be your best opportunity. So if you are a carrier that operates in this part of the country and you do get that load request come over, make sure that you hold strong with your margins. You can charge for this area today. So, and the short haul rejection rate also up. So if you're a regional carrier, that's fine too. Keep your rates high out of this market today. If you do get a load request, do not say that it's January and I'm going to keep reducing my margins. So this is one of the areas of the country, limited areas of the country, I should say, that you can do that today. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Good morning, everyone, and welcome to your broker update. I'm Luke, and we got a lot to talk about. First, let's take a look at the chart behind us. So we've been taking a look and seen falling rejection rates out of the U.S. after the holiday season. So not much of a surprise there. It looks like we're not seeing the drops quite as drastic as we were. So you see this blue line here. We hit our peak right about 14%, and we've come down quite substantially to a little above 7.5%. So we'll see if that level holds or if it continues to drop. We'll find out here over the weekend, but for the most part, it's still cooling. So you're going to be able to push carrier rates down in order to create bigger margins. So use that to your advantage. That green line, on the other hand, is the volume levels, right? So we've mostly recovered from this volume dip here after the holiday. So shippers are all back in the office. They're moving their freight. There's a lot more to be had. We've kind of hit this peak, and we had a pretty much settling in there. You'll notice here on this left axis on the index scale, we're sitting at a little under 10,000. Basically, anytime you see volume level above 10,000, that signifies growth in terms of volume in the U.S. market. Anytime it's below that, it's contracting. So we're still a little bit below there, a little lower than we'd like to be. But as that continues to push up, as more and more shippers begin moving more freight, there'll be a little bit more volume to move. Let's take a look here at our money map for today. So this is where you're going to be focusing some sales calls for best potential efforts. So what you want to do, how you want to read this map, is you want to make and focus your sales calls in markets that are both blue as well as have height to them. So the darker the blue means that there is a greater weekly increase in outbound volume. So you see some blue here down in southern Texas, a little bit there in the Midwest, way over here in California, right? So in those areas of the markets, they've had an increase in volume, right? San Francisco, Fresno, even a little bit here in Salt Lake City. Looks like Memphis has seen a little bit up there in kind of the Midwest region of the U.S., but not a lot of volume there. The height of the market represents market share. So if you're focusing sales calls for today, you might want to focus on Salt Lake City, a lot of volume there. Over here in Fresno and San Francisco, maybe Memphis, as well as like Baltimore, Philadelphia area. Those markets have seen an increase in volume, but also just have a lot of volume to move. So call those shippers up, see if you can move some of that freight and win a little bit of extra loads as we go into the weekend. Next up, we're going to be taking a look at the San Francisco market. So really interesting here. We've seen that we're looking at this is the dry van outbound tender rejection percentage over the last year. So we're sitting right under 6.25% right now. So we saw this massive spike above 10, and we're sitting at about 6.25. What's really interesting, if you can see, right about a year ago, all the way through this whole chart, we never once touched 6%, minus this little blip around Thanksgiving. So if that level can hold, that's a really good sign. It means that rates are beginning to push up. That being said, day over day, week over week, rates are down. So if you are paying the same amount today as you were yesterday for dry van loads out of San Francisco, you're overpaying. Push carrier rates down in order to create bigger margins. One last chart we're going to take a look at is a volume chart. So right here on my left is the blue line is dry van volume out of San Francisco. So you see a big dip, and we've recovered. So if you're moving freight out of San Francisco, you have customers there, call them up. There's volume to be moved. Make sure you're expanding your relationships with your customers in order to win more business. Reefer is going to be in green, recovering a little bit, but not a lot of volume there. So you might have to wait a little bit until that picks up. I'm Luke. That's your broker rate for today, and have a great weekend.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the freight tech revolution sounds like. FreightCast, presented by FreightWaves. Subscribe now wherever you get your podcasts.
I'm here with Andrew Cox with our shipper update. Andrew, what do you have for us today?
Today we're talking the December jobs report. It came out this morning. We've got some good news and some bad news.
Okay.
Overall, we do have we have a 2019 that was capped off with some steady but slowing growth. We'll jump into the good news. I like the good news first. The good news is total non-farm payrolls, they jumped to 145,000 jobs in December. This was a little bit below Wall Street expectations. People were expecting about 160, but 145 is a good clip. If we want to dive into a couple of the sectors, first of all, retail, it had a really healthy clip, up 41,000 jobs in December. This is good news for those truckload carriers,
right.
And good news for the shippers that are moving retail goods. We move a little bit into construction, some of the flatbed stuff. Construction, we've had some mixed data come in. We had 20,000 jobs added in December. The good news is that's a good growth after a slowing in October and November. But we've also had good jobs. We also had good housing reports. The housing new starts in October and November. But the bad news is here, if we look at the year-over-year change from 2018 and 2019, we only added about half the jobs in 2019 as we did in 2018. And the same story goes for transportation and warehousing. We actually lost 10,000 jobs in December, which isn't astronomical. It's not much at all. But if you look at the year-over-year change, we only added about a fifth of the jobs that we added in 2018.
Right. So, Andrew, going through some of these breakouts here, so for example, construction added a lot of jobs this month. And it's been one of the problem areas a little bit. There's a lot of demand, but there's been supply side issues. One of those issues being employment. So I guess that seeing this number here is really good news for continuing those strong trends with housing starts.
Yeah, it is. It is good news. And some of the bad news, we'll get to it in a little bit, is the wage growth, which kind of comes on the back of this, what you would expect, better wage growth with unemployment as low as it is. It's
right.
Near, it's the lowest that it's been in like 50 or 60 years. But wage growth slowed quite a bit in December, only 3 cents on the dollar per hour growth. It actually brought our annual rate below 3%, which was the first time in 2019 that we've had wage growth under 3%. And then the last sector I have here is manufacturing, and it also lost a few jobs, lost 12,000 jobs. And again, I'm just looking at this 2019 versus 2018 change. It added only a fifth of the jobs. It's just, 2019 is a slowing year. It still had some steady growth, but much slower than 2018. And
that really echoes some of the sentiment that you brought here earlier in the week, when we went over the PMI, right? And it showed that contraction, and so it really kind of gets echoed here. But overall, good news for the employment. And one of the other things I think I saw was the quit rate was really high. So I think quit rate really a good indication of how confident consumers are feeling in the job market, how confident they're feeling, and looking in the market for a new job. And so with that tight labor market also comes confident consumers that are feeling good about their chances going out there.
Most definitely. And maybe we see this confidence metric fall down a little bit in the next couple months because the wage growth is slowing. Not everybody knows about this total, but people can feel it in their wallets.
Right.
But overall, slow but steady growth moving into 2020.
Right, and I think one of the things that we have to be careful of, a confident consumer without the wages might start overextending themselves with those credit cards, and that's something we want to kind of stay away from, right?
Yeah, certainly. But we've for the last couple weeks, or the last couple months, we haven't seen the revolving debt grow up too much. We saw like student loans and auto loans moved up a little bit, but we haven't seen them really extend themselves too much, which is definitely a good sign.
Great sign. So, Andrew, thank you so much for these insights.
Thank you, sir.
And thank you so much for tuning in for this Friday edition of FreightWaves Now. That's going to do it for this episode and bring us into the end of the week. The content doesn't stop here. We're always posting around the clock, so check us out on all your favorite social media platforms as well. And we have our FreightWaves TV app, so check us out on all your streaming platforms, including Apple TV. And we'll see you on the next episode. Thanks so much for tuning in.
FreightWaves continues to follow the incredibly sad story of Indianapolis-based carrier Celadon Group abruptly shutting its doors, leaving 4,000 people without jobs weeks before Christmas. We here at FreightWaves want to help. FreightWaves has established a free job board for companies to post their openings and for people looking for employment in the freight industry to share their resumes. There's no cost for anyone to participate. Hundreds of jobs have already been added to the site since it went live on Monday. If you're looking for employment or have a job to post, head to freightwaves.careers.